Oil producers are at war with market speculators, but after a unique summit in Jeddah, they've been left speculating themselves over the future of their precious commodity. What's the solution? Increase production, throw money at the problem, or start looking elsewhere? The ins and outs of the oil crisis. This is Inside Story. Hello, I'm Kamal Santamaria. Is OPEC holding out while oil and fuel prices soar, or is it actually, to coin a phrase, over a barrel? Either way, it's an expensive barrel now firmly ensconced above $130, and that's what prompted a summit in Saudi Arabia of the world's leading oil producers and consumers. The result was an extra 200,000 barrels of Saudi oil a day from July. That's on top of the 300,000 barrels already promised. But guess what? Oil prices kept rising, echoing the mantra of the head of OPEC, who reckons increasing output won't stabilise prices. Bethan Howe has more.
A common commodity, but not a cheap one. There had been hopes of a stay in the soaring price of oil, but as markets opened after the Jeddah energy meeting, prices have continued to rise. Saudi Arabia is the world's largest exporter of crude oil. King Abdullah said the country would do its best to stabilise the market by meeting any increase in demand. He also offered help to some of the poorest nations.
I suggest that $1 billion be set aside as funds for the program, and I announce that $500 million will be supplied by the Saudi Development Fund in order to support the developing countries and to enable them to get the energy they need.
But the efficacy of these promises is already being questioned. The increasing cost of oil has seen demonstrations in Europe and Asia against prices that have doubled in just 12 months.
I want to thank the Kingdom of Saudi Arabia.
British Prime Minister Gordon Brown had suggested that alternative sources of energy could bridge any gap in supply and demand.
Britain and other oil consumers should open our markets to new investment from oil producers, including sovereign wealth funds, in all forms of energy, including renewables and nuclear, providing oil producers with a long-term future in non-oil energy.
But some new energy sources are also controversial. Biofuel-producing countries are being accused of contributing to higher food prices at home. But delegates did agree that fuel prices are too high and that something should be done. In a final statement issued by the conference, the delegate countries called for greater regulation and investment.
The transparency and regulation of financial markets should be improved through measures to capture more data on index fund activity and to examine cross-exchange interactions in the crude market. An appropriate increase in investment, both upstream and downstream, is necessary to ensure that the markets are well supplied in a timely and adequate manner.
The same 36 countries have agreed to meet again within the next few months. But with no firm decisions made, the world is still waiting to find out when and if the price of fuel will drop. Bethan Howe for Inside Story.
Joining us now to discuss this issue are our guests in London. Mamdouh Salameh, an international oil expert and a consultant for the World Bank. Also in London, Manusha Takin, senior policy analyst at the Centre for Global Energy Studies. And in Bristol, Christopher Moulton. He's the chairman of Organic Power and the UK representative on the Bioenergy Committee of the International Energy Agency. Gentlemen, thank you for joining us here on Inside Story. I'm going to go to London and speak to Mamdouh Salameh first. Let's talk about what we saw in Jeddah. What do you make of those Saudi initiatives, the soft loans for the poor countries, starting an OPEC fund? Do you think it'll make a difference?
I don't think so. The conference in Jeddah was not expected to solve the problem of the steep rise in the oil price, and it was, in my opinion, a public relations exercise, no more. If you are going to stop the steep rise in the oil price, you have to take measures. Unfortunately, the measures which we can take now are not immediate. We have long-term measures to be taken to produce results. That's why the price will keep going up. The rise in Saudi oil production is hardly sufficient to slow down the rise in the oil price, and it hardly sufficient to offset the decline in production in countries like Nigeria and Venezuela.
So you wouldn't even say,
support.
sorry to interrupt, you wouldn't even say that it was perhaps a little bit encouraging to see OPEC's biggest player, at least it's starting to increase production and looking for an alternative, this idea of loans for the poor countries?
As vis-a-vis the first part, what Saudi Arabia offered is the amount of extra production capacity it has. Vis-a-vis helping the poor countries, that is not the way to help them. What can be done, and I recommended that 3 years ago to the World Bank, is that the oil producers should allocate at least 1 to 2% of their oil revenues, put it at the disposal of the World Bank, who will invest it in job and wealth creating projects in these poor countries. If you transfer to them money, the money will go away. But if you create projects under the supervision of the World Bank, then you can achieve some results and improve the standard of living of these people to offset the rise in the transport fuel costs.
Manusha Takin in London, what do you make? Mamdouh Salameh is saying it was almost a PR exercise. Do you think that's what it was, that the Saudis were trying to be seen to be doing the right thing rather than doing the actual right thing under the circumstances?
Well, to have an impression on the public opinion definitely was, of course, one reason. But I think whatever, the meeting was useful. It's always good to have dialogue between producers and consumers. Because as Dr. Mamdouh Salameh was saying, we should not expect any immediate change in the price of oil from the decisions of this meeting. It would have a medium long-term effect if these policies that people are talking about, investments in upstream, downstream, more refineries and so on, are actually implemented later on. But I think the meeting, from the point of view of having a dialogue and making all these politicians to think what the reasons are behind the high oil price, to get involved in the debate as to the level of technocrats, whether it is fundamentals or the financial speculators or what. I think it was good to have the politicians sitting there and getting involved. And that by itself, I think, is a positive one. But the expectations were probably too much. The 200,000 barrels per day more oil coming was already mentioned as a very strong rumor, as an almost definite a few days before the conference. So the oil market had discounted for that. There was nothing new to come out of it. And obviously, on impact on the price of oil, we did not, and we did not expect, and we did not see any immediate result from the meeting itself.
Okay, let's get an alternative view on this, if you like, and speak to Christopher Moulton in Bristol. He's, of course, from Organic Power. Gordon Brown was there at the meeting in Jeddah, and he spoke, as he does, quite passionately about this idea of alternative energy sources. Is it something which can be effective in the short term, or is it just something to invest in now for the future, the long term?
You're very kind. If I could explain, I'm not hearing you very well, but you're saying about the investment in renewable energy should really have started a long time ago. Renewable energy is not something which you can pull out of the bag quickly, in the same way that diesel oil or petrol has taken probably 100 years to develop to the state that it is in at the moment. You can't just expect to pull something out of the hat immediately when there hasn't been any investment in the past. But listening to, I got some of that, the previous conversation, and to think that something was going to happen at the conference, I think is ridiculous. The whole thing's just crazy. Oil is getting scarce, and to think of just increasing it, that's patching it up possibly. But what needs to happen is we have to find an alternative to oil, and I would have thought the people producing the oil are in an ideal position to do that. They can get a lot of money for the oil at the moment, and why shouldn't they? But at least put that money into the future, so that we don't all run out of energy when the oil really does start to run out. I don't believe actually it'll run out. It'll just get very, very expensive.
If it isn't already. I want to stay with an idea that you brought up earlier about the time frames, how long it takes to get these things happening. If I remember correctly, last time I interviewed you, you said you had a car which runs on very, very clean energy. For example, how long did that take to get to an efficient stage where you could use it efficiently?
That's been a development which has gone on for about, as far as we're concerned, we had the first vehicles running on gas actually in 1969, I hate to say. But yes, it's now incredibly clean. In fact, we had, in England, we have I'm sure you're aware of the London to Brighton run. We also have once a year the Brighton to London run, and that's for ecological vehicles, and our vehicle actually won that. It had the lowest emissions of any of the vehicles, and that vehicle is running on food waste, not food that people throw away because they're wasting it, but the food which is the stalks and the stems and things from things like Brussels sprouts, for instance, is a good example. If you only eat a very small part of the plant, the rest of the plant gets thrown away normally, and that is where we see an enormous, totally wasted resource at the moment.
And I'll go into that more in the second break when we talk about investing into alternative sources. For now, I'd like to go back to Mamdouh Salameh in London and just pick up on a point which it was either you or Manusha Tarkin made about speculators, because this is who oil countries and the likes of OPEC blame. They say it's the market speculators who are actually driving the price up. Can you just give us, because it's a term we use so often, just give us a basic explanation. What is a market speculator and what damage are they doing?
Well, let me start by saying we don't have to over-exaggerate the power of the speculation. The speculators appear when there is a tight market. We already have a tight market. Second, the speculators go where they can make a very fast profit. The value of the dollar is declining very quickly vis-a-vis other currencies, and consequently, speculators have to make money, so they are investing in oil assets and various profitable things. However, the oil speculation accounts, in my opinion and my calculations, between 10 to 15% of the oil price, no more, which means 13 to 15 or $16. Out of 140, we still have more than $120 a barrel. So speculation is hyped up to be a monster, but actually it is a small percentage in the rise of the oil price. We have to look at other factors, which when you give me the chance, I will outline them.
Okay, we'll look at that more in the second break. For now, we are going to take a break. And when we come back, we'll take a closer look at OPEC itself as well. It is the center of attention here, but how much is it in control of the energy market? We're back in a moment.